You spend hours tracking every receipt, reconciling every account, and delivering flawless financial records. Yet, when it comes time to review the invoice, the client treats your service like a generic utility bill. They shop around for a cheaper rate, completely blind to the meticulous effort you just provided. The issue is that clients often view financial professionals as historians. When your entire output revolves around categorizing transactions and generating reports on what already happened, you trap yourself in the past. Meanwhile, business owners are sitting awake at night, desperate for answers to 4 specific questions. Where is my money going? Will I have enough cash? What should I change? And what happens next? A perfectly balanced spreadsheet doesn't answer those questions on its own. It provides the raw facts, but leaves the client to figure out the strategic implications entirely by themselves. Firm, if your workflow ends at documenting history, your value stops there too. Clients simply do not pay premium fees for a record of what already occurred. Clean books are the absolute foundation of any healthy business, but accurate reporting has to be the starting point rather than the finish line. To move up the value chain, you have to transition from task-based work to decision-based work. Delivering a monthly report completes a task. Showing a client how to protect their profit margins forces a business choice. This diagram outlines a framework called the translation pipeline. It takes scattered historical data points, forces them through an analytical filter, and converts them into clear, forward-looking direction. By moving data through this pipeline, you shift from a recorder to a translator, turning an overhead expense into trusted advisory. The pipeline begins by interpreting the data through the lens of the actual business model. A strong advisor never starts by reading the profit and loss statement in isolation, because a company can look highly profitable on paper while simultaneously spiraling toward a cash crisis. Evaluate numbers across 4 drivers: revenue, cost, margin, and cash. The income statement tells the performance story, and the balance sheet reveals health, but the cash flow statement tells the survival story. If the cash lifeline blinks red, other metrics lose relevance. Reading the business means looking past the totals to find the pressure points. The statements provide the raw material, but your analysis uncovers the meaning. Once you understand the business context, you have to filter the information. Handing a business owner an unfiltered 50-page financial packet usually results in analysis paralysis. Strip away vanity metrics that look impressive but don't inform strategy. Instead, build a concise dashboard of 5 to 7 critical dials that actually move the needle, like burn rate, cash runway, or accounts receivable days drifting into dangerous territory. To ensure a metric deserves a spot on this dashboard, it must follow a strict rule. It needs a designated owner, a clear target, and answer a specific operational question. The objective is clarity, not volume. Ruthlessly prioritizing the few numbers that dictate survival and growth gives the client focus. The final step is translating those prioritized metrics into action. If you simply tell a client that revenue went up 18% while gross margin fell by 9%, you are giving a bookkeeper's response. It is accurate, but it leaves the client to figure out what to do with it. A strategic advisor uses a 4-part storytelling framework to drive action. Step 1 is stating what happened. Instead of a data dump, you lead with the headline. Sales are growing, but the business is less profitable. Steps 2 and 3 explain why it happened and why it matters. You connect the numbers to real stakes, using phrases like, "The risk here is that our current growth is creating operational pressure instead of strength." Step 4 is the pivot to action. You ask, "What should we do now?" and prescribe a concrete move, like tightening collections and protecting the profit margin before attempting to scale any further. Clients do not think in debits and credits. They think in risk and opportunity. Translating complex data into plain English is the ultimate mechanism for delivering executive-level value. The translation pipeline is complete. You have taken historical data, contextualized it through operational drivers, filtered it down to a handful of core metrics, and delivered the insight through plain English storytelling. This changes the entire dynamic of the relationship. You are no longer viewed as a replaceable vendor managing the cargo in the hold. You become the navigator, standing at the bow, pointing the captain safely through the storm. The underlying numbers of the business never changed. The math is identical. What changed was your role in applying those numbers to the future. To get paid like a CFO, you have to stop asking if the task is finished and start asking if your work helped the client make a better decision.